First, welcome everybody to today's workshop. Please feel free to keep your camera on or on. We appreciate your active participation in whatever way feels better for you. Don't forget to add each other to LinkedIn and connect with our facilitator. I put the information in the chat and we put it again just to make sure that everybody has got it. Today we have Alexandra McLean with us, and I will be your host today, Julia Ramirez. And we will start today with an acknowledge of our land. So I'm just going to start today. We would like to begin by acknowledging that the Tribe Network is located in the Mi'kmaq, the ancestral land and unceded territory of the Mi'kmaq. And we acknowledge them as the past, present, and future caretakers of this land. Tribe Network recognizes and honors the many nations of indigenous people who presently live on this land, those who have spent time here, and the ancestors who have hunted and gathered across this land known as Turtle Island, Canada. To start, a little about us. The Tribe Network is a leading technology entrepreneurship and innovation hub for racialized communities. We are a community of Black and Indigenous and people of color pursuing entrepreneurship and innovation in Canada. We provide our members with access to relevant resources so they create wealth and make the world a better place. About our pilot, a main project, the Tribe Network's Black Startup Project is a unique program providing Black entrepreneurs and business owners in Atlantic Canada with access to service and opportunities in the entrepreneurship and innovation ecosystem to help start, build, and accelerate their business. Our programs deliver education and workshops tailored to Black entrepreneurs like this one tonight. We also want to share our values. We lead with love. We want to nurture community. We believe inclusive and leadership, and we practice creativity. And to start leading with love, we want to give you the best experience possible. So to do that, everyone needs to treat each other with respect and be mindful of each other's experience. Just making sure. So now I'm going to introduce your facilitator. We have Alexandra McLean, who is a proud African and Nova Scotian and a multi-talented business professional. Since graduating in 2020 from Mount Sinai Vincent University with Dean's List First Class Honors and double major in accounting and management, Alexandra has been working at the innovative chemical company Colorsmith Labs, Inc., and is the operational service manager. Alexandra is an integral part of the company, responsible for HR, day-to-day operations, and most importantly, managing the company finance and ensuring financial health. Alexandra also enjoys giving back to her community by leading financial workshops for youth and entrepreneurs like the one tonight. In addition to her professional experience, Alexandra is also heavily involved in the film and television industry as a writer, actor, and stunt performer. You can catch her in the TV series such as The Trades, In Crave, Bullies, and 5TV1, and Dexter and Ceci. And I give you the floor, Alexandra, whenever you're ready.
Thank you, Julia, and thank you to Tribe for having me back again this year as a part of the Black Startup Project to lead a financial literacy workshop. It's great to be here with all of you today. I'm just going to switch with Julia and share my screen to continue the rest of the slides here. There we go. Okay, so the agenda for today includes the following topics. So understanding the concept of cash flow and its importance in business, understanding the mechanics of cash flow. So we'll touch on cash flow statements a little bit and also cash flow projections, tools and techniques for forecasting future cash flow, building budgets. If you were in my workshop last year, the budgets will be It's pretty much the same presentation on budgets, but if you weren't there, great. This is new information, and if you were, it's always great to have a refresher. Building budgets is kind of my bread and butter and my favorite thing. And then we'll also talk about cash flow management and projections, strategies for managing and improving your cash flow. So this session is really going to be about cash flow projections, forecasting cash flow in a small business as an entrepreneur. And I will use my experience, personal experience as a budgeter, but also my experience at Colorsmith to walk you through these cash flow tips and tricks, because that is kind of my main job at the company right now. So first things first, understanding the concept of cash flow. So it's hard to see with me sharing, so I'm just going to get out of Zoom and go to my own slideshow. Please let me know if you can't see the slideshow anymore. Can you still see the slideshow?
Yep, we're good.
Perfect. Okay, great. So understanding the concept of cash flow and its importance in business. So let's start out with a few definitions first. So cash flow. Now, cash flow is the money that flows in and out of your business throughout a given period. It's a very good way to determine the business's overall health, and it's essentially the net amount of cash and or cash equivalents being transferred in and out of the company. Runway, it's usually calculated in months. The term cash runway refers to the length of time that a company has before it exhausts its current sources of funding, and so essentially before it must seek additional capital. So there is a runway formula to help you guys, everyone, figure out what their runway is. So I'm going to use an example of the runway formula to decipher how many months someone might have left in their company before they run out of cash. So this is super helpful. Like at Colorsmith right now, we're getting ready to raise more capital. So it's super important that we know what our runway is, so we know when we are going to run out of cash. And of course, we want to make sure we don't run out of cash, because then we can operate the business. So runway is super important. So the formula for runway is cash on hand divided by the burn rate. What's the burn rate? So burn rate is essentially the money you're spending per month or during a given period of time. So the burn rate equation is your starting balance minus your ending balance divided by months. So we're going to do a whole example here. So let's say in January, the business has $1 million in the bank account. At the end of February, there's $900,000 in the bank account. All of January, all of February, that's 2 months. So we'll divide 1 million minus 900,000 divided by 2 months. So that's $100,000 divided by 2 months equals $50,000. So that's the burn rate. You're burning about $50,000 per month. Now we run back to runway and we say, okay, we had $900,000 at the end of February divided by, so that's how much we have in the account. Let's say it's the end of February now. So we have $900,000 in our account divided by $50,000, which was the burn rate, equals 18 months of runway. So that's kind of how you would figure out how many months you have left until the business runs out of cash. It's a simple formula. Of course, there's a few other things that go into it. You might have revenue, and we're only talking about expenses, but we will get into this cash flow projection a bit later and some softwares you can use. So that we'll take everything into account. We'll take your revenue into account, all the funds that you have in your bank account. But in simple terms, that is essentially how you calculate your runway. And so why is this important, right? Why is cash flow important? So the obvious answer is that you can't run a business without cash, right? And that kind of sums up most of the other reasons why cash flow is important and why knowing your runway is important. Another reason is for investors, right? So investors will look at the health of your cash flow projections. They'll look at what you spent your money on, how long it took you to run out, how you're maintaining your runway. For example, if you just did a financing round for $1 million and after 2 months, you've already spent half the money, yikes, right? Why are you running out of money so quickly? What are you spending your money on? So the chances are you didn't budget or you didn't forecast your future expenses. You didn't do a cash flow projection. So that's why we're really going to get into that today. So that is the first slide. I'll pause for any questions before we continue. You can just unmute yourself, or I can't see your hands, so if you click the raise your hand button, that
And
should
we
work.
keep an eye in the background here, but so far we don't have anything.
Okay, great. So, understanding the mechanics of cash flow. All right. So, I'll briefly touch on a cash flow statement because certain investors will ask for it. But truthfully, I think the cash flow projection is more important, and we'll get into what the difference is. Personally, in my day-to-day, I've been at College for 2.5 years, and I don't look at the cash flow statement very often. I'm not often asked to forward it to investors or to anybody else. Like how you're spending your money is important, which is on the cash flow statement, but it's also in your budgets and it's also in your cash flow projections. So I really think having access to that information in a nicer, more concise format using budgets and your cash flow projection is more important. And so that's why we'll spend most of our time on that, because the cash flow statement can also just be generated by QuickBooks. That's how I think most companies do it. If they have QuickBooks, they'll go on there and they'll click reports and they'll find their cash flow statement. They'll find their income/profit and loss statement. They'll find their balance sheet. So that's really a statement that QuickBooks can generate for you. And it doesn't tell you as much. It's not as informative, in my opinion, as a cash flow projection. So let's dive into the differences. So cash flow statement is a type of financial statement, as I said, like a profit, loss, or a balance sheet. But this one shows how much money and cash equivalents a company has on hand. So this will offer a clear overview of how a company's operations are run, where funds come from, and how those funds are spent. All of these cash receipts and payments are summed up together to derive a figure known as the net cash flow, which is essentially the cash left over once all cash coming in and going out is accounted for. But a cash flow statement is split up into 3 sections. This is where it comes really in handy that QuickBooks will do it for you because it gets kind of confusing. But there's 3 sections. So there's operating activities, there's investing activities, and then there's financing activities. So operating activities are, to put it simply, the activities that help a company generate revenue. So they represent the amount of cash a company generates or consumes from carrying out its operating activities over a period of time. So examples would include generating revenue, paying expenses, and funding working capital. The investing activities are any cash movements in the firm's investments, whether they're short-term or long-term. So the changes in cash from investing are usually considered cash out items because cash is used to buy new equipment, buildings, or short-term assets such as marketable securities. So when we see the next slide, you will see an example of a cash flow statement, and you will see that typically the investing activities are a cash out item. The last section is financing activities, and these refer to the firm's shareholders and creditors. Cash from financing activities includes the sources of cash from investors, banks, and the way cash is paid to shareholders. Changes in cash from financing are cash in when capital is raised and cash out when dividends are paid out. So if a cash flow statement is done accurately, which thank you, QuickBooks, it typically is, and I don't have to do it myself, and you won't have to do it yourself, the totals of these 3 segments will add up to a firm's total cash flow. So what you will notice is if you have a cash flow statement and you go on QuickBooks and you put in a certain date, and then you look at your cash flow projection, which again we'll get into soon, if you are looking at the end of February, the cash on hand figure should be the same. If you want to learn more about a cash flow statement, I suggest going to Investopedia. They have a lot of great information on like the breakdown of cash flow statement and kind of what it all means. But again, I'm not going to focus too much on it because I'm really here to talk about cash flow projections. So, cash flow projections, cash flow forecasts, same thing. So these use insights and analysis to anticipate how a business's cash flow will perform in the future. So the cash flow statement, it offers an overview of the current year's inflows and outflows, but a cash flow projection looks into the future to let you know what your cash position will be 2, 3, 4, 5, 6, 7, 18 months into the future. And so here's an example of a cash flow statement. It's a very simple one. I just pulled it from Google or from Investopedia. But you see you have the 3 sections: cash flow from operations, cash flow from investing, cash flow from financing. And as you can see in the investing, as I was saying, the 500,000 is negative, you're investing in equipment. So as I was saying about the investing section, is that they're usually cash out items, right? So it would decrease your cash. The next slide will show you a cash flow projection. Looks like a lot. We're going to dive deeper into it. This is again just pulled from Google, and later I will show you a simple one that you can do in a spreadsheet. Also going to talk about softwares that will again essentially do this for you. But you can see here from this cash flow projection / forecast is that there's dates at the top, right? To show different dates. This is projecting into the future, how much cash you will have. And these are all based on assumption and historical data. So the thing, and I'll get into this again, but the thing about a cash flow projection is it does have to be looked at, edited, changed pretty frequently because you're making assumptions based on historical data, what you think, for example, what you think your cash sales will be in a month, or what you think, I mean, salaries and wages, depending on, how you pay your employees, it typically won't change over the course of a month or what have you. But maybe operating supplies here for 3,000, you might be assuming based on an average of historical data that you're going to spend about 3,000 on operating supplies. And that may not be the case, but you do your best to put in these averages. Again, I'm overwhelming with information. We will get into it in a simpler format a bit later, but I just wanted to show you the difference. This is kind of just lays out all of your expenses, and you are doing a projection over the course of months typically, and you can see far into the future. Whereas, oh, I went too far. Whereas the cash flow statement is not looking at the future, it's kind of looking at now. I'll pause. I think there might be a question in the chat.
We don't have any questions in this moment.
Oh, there's just a message there. I thought there was a question. Okay.
Nope.
So no questions, then I will continue. Okay, so now we're going to get into the meat and potatoes of how we are going to forecast, how we are going to create these cash flow projections. So the 4 things that we will look at today to help us, these 4 tools and techniques, are special projects, budgeting, softwares such as Fathom, which is the one that we use at Colorsmith, but there are others, and then using a spreadsheet if the company is maybe smaller, you have fewer transactions, fewer expenses, and each slide I will break down these 4 bullet points. So we'll start with special projects. Okay. So special projects pertain to large non-fixed expenses that you know are coming, you must incur them, you feel they're necessary, you can't really get out of these. So they're not fixed monthly expenses. They're more like large expenses that are coming maybe twice a year or annually, or maybe it's just a one-time thing. So these are expenses that we are going to budget for. And the earlier the better, because let's say it's February, and you aren't reminded that in March you have a $10,000 bill coming. And then March comes and it hits you, and you don't really have the runway or you don't have the cash flow. It takes a huge gut punch to your finances because I forgot that I was going to have to pay $10,000 out in March, right? So the earlier the better that you know these big special projects are coming. You want to budget them and budget for them and put them in your cash flow projection. So another thing to do with these special projects is to maybe have a monthly meeting. So I host a monthly meeting at Colorsmith. It's called a special projects meeting, where I meet with the business side of the company to ensure that I have an understanding of any special projects that are coming our way, to confirm the cost of those that we already have in our projection. Because sometimes, we're expecting it's going to cost 10,000 for a piece of equipment, and looks like it's actually going to cost 12,000. Sometimes we thought we had all of our special projects written down, mapped out, and we have this meeting like, hey, I'm sorry, but we're doing this piece of research and we actually do need to buy a new piece of equipment. I know we didn't have it on the charts, but we need to buy it. So we just want to make sure, like, every month at least, that we have a good understanding of all the special projects, because like I said, to be hit with a fee of $10,000 just out of nowhere, even if it's 2,000, 3,000, 4,000, depending on the size of your company, like, this can really put a damper on things. And so you want to know ahead of time when you have these big projects coming. Typically, you want to hope for maybe 4 to 6 months in advance that just so you can really budget for it and ensure that you're not going to run out of cash flow. Some examples of special projects. So D&O insurance, directors and officers liability insurance. That's a good one. It's annual. If your team has annual parking passes, that could be one. If you work with patents, there's large patent families, tons of fees. They're irregular, but they're coming, and you may want to ask you do want to ask, if you have patents, your patent attorneys for a spreadsheet that maps out all of the expenses for the year for each patent family. And then you can add those figures to your cash flow projection and make sure that no surprises are coming, to the best of your ability, because patent officers can hit you with bills you weren't expecting, no matter how much you try to budget for them. But you want to be as on top of it as you possibly can. Another one, like I said, equipment. So if you know that you need to buy 3 new laptops, or you do work in some kind of lab like I do, and there's this piece of equipment to help make contact lenses like Colorsmith does that you need to buy, those kinds of things that are going to be large expenses that don't really fit into your day-to-day operations, and you don't want to be blindsided by them, essentially. Your forecast will also include special projects so we were just talking about expenses. We also want to maybe map out your special projects for revenue. So Colorsmith is a pre-revenue company, but we file a SR&ED return every year. So I'm not sure if anyone's familiar with what SR&ED is, but it stands for Scientific Research and Experimental Development. And it's essentially a huge tax break that we get, and that scientific companies can get, research, R&D companies can get. And I'll break down SR&ED a little bit more further down in the slides. But essentially, that's a hefty tax return that we get annually. And so you're going to want to add these large chunks of change that you're going to get in on your cash flow projection as well. And this is not regular sales. That is something that's not a special project, because like I said, these are kind of irregular. They come maybe once a year or 3 times a year, and they're these really big projects, whether they're going to be money in or money out, and you want to map all of those out. You could even do it in your personal life if you really wanted to. If you know that you have a wedding to go to in Bermuda, maybe you write down in your own personal finance spreadsheet, or however you do your finances for your personal life, like, oh, I'm gonna need $2,000 for this wedding and I can't get out of it. I want to go. It's my sister. I'm the maid of honor, that kind of thing. Um, any questions on special projects?
We don't have any questions right now.
Cool. All right. So I was talking about budgeting for your special projects. Let's take a second and talk about budgeting as a whole now. So again, as I said, if you were at my workshop last year, this would be a bit of a refresher. Always important though. So of course, the number one way to avoid running out of cash in your company and in your personal life is to budget. So I will talk about how we budget at Colorsmith. That's my job. And it's also how I budget in my personal life. So if you take nothing else away from this session, I would say maybe you'll get some tips about how to budget in your personal life. So through Colorsmith, at least a year ago, probably almost 2 years ago, I took a course called Profit First with April Stroink. And we essentially at Colorsmith took some of the information that I learned in that course and merged it with my own philosophy and created this whole new budgeting plan for Colorsmith. So the first thing is to have multiple accounts. So at least a checking account and a savings account or a cashflow GIC instead of the savings account. If you don't know what a GIC is, it's a secure investment that guarantees 100% of your principal and interest when held to maturity. So basically, it's a safe investment because you will get 100% of your investment back. And sometimes banks have promotions where the GIC will be at 4.5%. It's essentially it's a safer way to invest. You're not investing in like stocks or anything. It's just a GIC account, but it's free money. And I'll get into in a little bit of why we're going to have multiple accounts, but I just kind of gave one of those reasons away. It's free money. So have multiple accounts, checking, and then a savings or a cashflow GIC, one of the two, maybe both, that are earning interest for you. And we'll get back to that in a moment. So the next thing we want to do with budgeting is take a look at the expenses of running the company, look at your fixed costs, and look at your variable costs. So your fixed costs, of course, they're easy to budget for. Rent, usually your salaries, these fixed costs that don't really change from month to month. Very easy to budget for because you know how much you're paying for rent, right? Variable costs, a bit harder to budget for because, of course, they vary. But an example of a variable cost would be office supplies, pens. At Colorsmith, our lab costs, we use little lab tools like pipettes, and I'm not a scientist, but I do know we use pipettes, just little science disposable tools. That will be a lab cost. It's variable because, we might use 1,000 pipettes one week and 1 month, and we might use 500 the next. We never know how many you're going to need. So how do we budget for these variable costs? So basically what we're going to want to do is look at historical data, right? This makes sense. You're just going to look at historical data and use an average. So I always use lab costs as an example because do what you know. I know these costs well at Colorsmith. So let's just say we spent $300 on lab costs last month. And the month before that, we used $350, the month before that, $300. Like, we're always kind of around the 300 mark, right? And you can get out a calculator and you can actually do an average. But essentially what you're going to want to do for all of your variable expenses, look at your historical data, see how much you were spending over the past 3 to 6 months, average it out, use that as your budget for variable expenses. Add them all together, and then you have your variable expenses, you have your fixed costs, put those together, then you have a total budget for a month, right? So I'm going to use 50,000 as the total monthly budget, just a nice, clean, easy number to work with. And so now we're going to get back into those accounts. So let's say we have $50,000 a month. That is our budget. What you're going to want to do at the beginning of every month or the very last day of every month, kind of just set up the next month, you're going to take $50,000 and put it into your checking account. Just the 50, just what you need to run the business for the month. The rest of your money should be sitting in savings, in a GIC. And why? Number one reason, I already said it, it's earning free money for you. So there's no reason to, if you do a raise and you have $1 million January 1st, there's no reason for it to all be sitting in your checking account because none of it's making you any money. So why not free investment, right, into a GIC or in your savings account, earn a little bit of interest on that. Even in my personal life, I have similar to GIC accounts, and I'll go in and I'll check, and it's like, oh, $150 of interest this month. Great. It's just free money. So why not, right? The other reason, this is the biggest reason I think too. I guess they're all big reasons, but there's no temptation to spend more than you budgeted. And this one comes really in handy in your personal life too. So if you have $50,000 in your checking account to run the business for the month, you're not tempted. You're not seeing, oh, I have $1 million. It'll be fine. I can spend whatever I want. No, you have $50,000 and you have to use it wisely, right? And there's some unforeseen expenses that will come up from time to time. And if you aren't following this budget, how are you going to pay for these unforeseen expenses, right? So what you want to do is have that $50,000 in your bank account, in your checking at the beginning of the month. Now let's just say that's your budget. Let's say an unforeseen circumstance comes up where you have to buy a piece of equipment. It broke. It wasn't in the special projects plan. It broke. We need it tomorrow. You can transfer funds over to cover the expense. It's no problem because the cashable GIC or your savings account, it's cashable. So there's really no fault. There's no problem with putting your funds away into a cashable GIC, earning interest, because you can always take it out at any time. So you're not locked into, I only have $50,000, and if we go over budget this month because a piece of equipment broke, we are screwed. Not the situation. You can always go grab more money, but you're really not tempted to unless it's absolutely necessary. I hope that makes sense. Then at the end of the month, another good reason is you can see how well you did with your budget. Of course, you will have your budget written some way in a spreadsheet, or you can look at your cash flow projection. But it's also really easy to see, okay, at the end of the month, there's $2,000 left over in the checking account. So we were under budget this month. Amazing. You know, we have $2,000. What you can do with that $2,000 is whatever you want, right? You can put that back into the business and just keep it flowing. Just pretend you didn't go over budget. Or sorry, pretend you didn't go under budget. And it's like, yep, great. We're just going to keep on checking. Transfer $48,000 over checking. We're back up to $50,000. We're going to restart for the next month. Or if you want to congratulate your team or the business, and maybe you wanted to do a team retreat, but it wasn't really in the budget, wasn't really in the cards. But look, you have $2,000 that you saved. You can easily, clearly see that. And you might use that $2,000 for the retreat, like it's a bit of a reward. So you kind of virtually can do whatever you want, but it's very easy to see, okay, we came in under budget. Great job, team. So that's another reason why it's great to have multiple accounts and to just start with your budget every month. And again, it works in your personal life too. It's a really good feeling when I look at my bank account and I realize, oh, yay, I still have like half my budget left to use this month. We're doing okay, right? And it's also good too because I'm going to tangent for a minute, but I'm really glad that I got to do this workshop because I've been a budgeter since I could talk. And I was the kid who would get um, gift cards and wouldn't even want to spend her gift cards because it was still money to me. Once it was gone, it was gone. And that was a bit unhealthy. I've gotten healthier with my spending habits to the point where I can budget and I know that I can now spend money. But the reason I bring this up is because in my personal life now, sometimes I feel like, oh no, I'm spending too much money. And then you get to check your checking. I check my checking account and I see, no, I'm right on budget. We're good. But if I just had all of my funds that I've ever made just sitting in my checking account, not making any interest in a savings or GIC, it's all sitting right there, then I'm going to feel overwhelmed. Like, I don't know if I'm going over budget. I don't know what I've spent. So take away these budgeting tips for your business if you'd like, and possibly also your personal life, because I think they go hand in hand. Um, so that is a bit about budgeting. Does anyone have questions on that?
No, we don't have any questions in this moment.
All right, so from budgeting to software. So we will soon be putting our budgets into the cash flow projection. So, like I said about the cash flow statement, QuickBooks will generate it for you. There are also softwares that will semi-generate your cash flow projection. Disclaimer, I am not being paid by anyone to tell you which software to use. No one's giving me an incentive. I can only really speak to the software that I have used, but I do know that there are a number of other softwares out there. So the one I will talk about is Fathom, and I'll show there is a slide with a screenshot of what Fathom looks like, and we'll kind of dive into it a little bit. But there are others. There's some listed here like Cashflow Tool, Xerox, and then you can use a spreadsheet, which we'll dive into as well. Excuse me, but thinking or speaking of Fathom, the reason why we went with Fathom is because it's pretty user friendly. It's very easy to chat with someone if you need help. They have a chat box in the right hand corner and they have somebody help you within a few minutes if you have questions. But really, our bookkeepers suggested it to us as we grew as a company and needed a better way to keep track of our cash flow projections. And it helps if the bookkeepers know how to use the software already and are familiar with it and want to work at it with you. So, like I said, we'll talk about Fathom a bit more in depth. It's about $54 a month that we're paying for. Whether you want to use it or not, totally up to you, but it'll be really great to show you to kind of demonstrate what a cash flow projection should look like, whether you use Fathom or Cash Flow Tool or whatever you want to do. And I believe most of the softwares are connected to QuickBooks, which is key. Fathom absolutely is connected to QuickBooks. And so we will talk about that first, I believe. Okay. I apologize if this is hard to see, but basically what Fathom is a cash flow projection tool, which helps you see, you can see, I think for hours, you can see as far out as about 2027. So it really shows you a breadth of information based on your budgets. And so Fathom is also connected to QuickBooks. So remember when I was talking about historical data as far as variable expenses and things like that go. So because it's connected to QuickBooks, it can tell us in real time how much we spent on every single expense that we have in the company, and it can project how much we are going to spend in future months, and that ultimately tells us how much cash we have on hand and what our runway is. There's also a little tab down at the bottom that says cash on hand. If you open that within Fathom, it will also show you the burn rate and a few other interesting facts. So let's walk through this a little bit. So basically, with Fathom here, it takes the data from QuickBooks, as I said, and That's important, but you can also go in and add in your own budgets. So basically, you know, let's see, what's a good example? So, okay, so salary and wages. So again, this is not from Scholarship, this is just from Google. Um, salary and wages here, it says, okay, in October, $61,000 is what we paid for salaries. What you're able to do, it took that from QuickBooks, but what you're able to do is add rules. You can add in figures manually with your you can just type in manually your own figures. So basically, if we were always paying about $61,000 in salaries per month, and it knows that, QuickBooks knows that, it will continue to plug in about $61,000 for every month. But if you know, okay, we're implementing raises next month, you can go in and manually enter. You see here how the salaries goes up to 77. I don't know this company. I didn't create this, but this is a good time to just pretend that I went in and I was like, hey, we're going to implement raises. So our salaries are actually going to be more near the 77,000 mark. Then what you see is that it starts to do a bit of an average based on historical data. So then for December, it's now saying about 69 because it's like, okay, maybe that's a bit of an outlier. It's a bit of an average. We'll see. We'll check back in. So Fathom is really smart and it will take your historical data, but then you can put in your own figures and it will start to make assumptions based on those figures. And eventually it will even out and be like, oh, they actually are spending $77,000 on salaries every month now. And it will then forecast $77,000 each month. And that will affect the cash on hand and the runway, and it'll just automatically calculate it for you, like, oh, okay, because you increase your salaries, now you have X amount of cash on hand. It's a little bit less than you thought you were going to have, and it will start to shorten your runway. Super helpful because it does it all for you, right? You don't have to go in and really do anything, right? It takes everything from QuickBooks, and if you want to make minor adjustments when you need to, you can. And you should definitely be keeping track of this, maybe on like a weekly basis, just to make sure that, the figures were right in QuickBooks and that they came down properly, because sometimes maybe if you're not your own bookkeeper, your bookkeeper might look at an expense and categorize it incorrectly by accident. Happens all the time. And so it's in the improper place in QuickBooks. And so now on Fathom, it's saying, oh, you're going to spend X amount of dollars on lab costs this month. And then it starts to project, oh no, you're going to spend that much on lab costs every month. And then your runway starts to shorten. So you can catch little errors like that, which has really helped us because we thought we were going to have runway until June. And then we went in and we double checked a few outliers and like, oh no, we'll just fix these figures. And all of a sudden now we actually have runway to July, which is huge because we have to do a fundraising round. So this tool is so helpful just to plan out all of your cash flow, talk about cash on hand, runway, all the way up until 2027. And that's how far ours goes. You can go even further, I believe. And so it really maps out years for you, so you don't have to do it yourself. It's a really, really, really great tool. Again, it's not the only one out there. There's many others, but essentially this is what a cash flow projection looks like, right? It shows you, okay, here's the sales you're projecting, here's the expenses you're projecting, here's the cash on hand you have now, here's the cash on hand that you're expected to have at the end of December, the beginning of January. It's just honestly, it's as simple as that. Once you get the hang of it, it is really as simple as that. And like I said, they have great, great customer service. You can chat with them and figure out. There's not one way to use Fathom, right? There's scenarios you can create. You can go in and create these things called micro forecasts. Like, what if I were to hire 2 more employees at this salary? There's so much you can do with this, and it will generate it for you so that you aren't stuck doing it all yourself, which comes really in handy when you have lots of expenses, a larger company, maybe lots of employees. But again, we will go into a spreadsheet in a little bit. If you have a smaller company or less transactions and you don't need or want to pay for a monthly service like this, it's no problem. We'll get into that too. That was a lot and it was a bit messy. So if you have any questions, please let me know. If not, we will move on.
We don't have anything in this moment.
So spreadsheets, what you can do with a spreadsheet is virtually the same thing you can do with Fathom on a surface level. So again, if you have very minimal transactions, expenses, and things like that, you can use a spreadsheet just in Excel, Google Sheets, you can do it yourself. So this is an example of a very basic cash flow projection spreadsheet that you can do with like little formulas to help you figure it out. So we're gonna walk through this together. All right, so back to my slides. Okay, so no, back, okay. So here we are where you use your beginning cash. So let's just use January, of course, because I've been using January the entire time. Let's say you have $1 million in the bank, right? Remember that cash flow projections are predictions. They're for the future. So this isn't going to be perfect, and that's why you have to come back in maybe on a weekly basis and double check and make edits. But you can say, okay, based on historical data, we're expecting about $30,000 in this month. Maybe you're putting $20,000 in sales, and B is, and what's another source of cash you might get? Funding. Maybe you're going to get funding, a shred return or something. So you would put in the cash that you were expecting for the month. This is on a monthly basis. Then, of course, here you go. You sum up all of that cash. Then you get into the expenses. Okay, we know that salaries are going to be $20,000 this month. So we pump that in for A. We know that rent is going to be $1,000. We know that lab costs based on historical data are going to be about $300, right? You just write down all the expenses that you're expecting in the month, total the expenses, take the incomes you're expecting minus the expenses, and then you get your closing balance, right? So you start with $1 million, you add some cash in, you subtract some cash for your expenses, and then here's what we're expecting to end up at, throwing a number out there. At the end of the month, we're expecting to end up at 900,000. Great. So then you are forecasting what you think you will have in the bank at the end of January. And you can forecast this out each month. And every time you'll see your closing balance, depending on how much revenue you're expecting or you get in, will decrease a little bit, right? And you will see each month how much cash is on hand. You can calculate your runway using the formula that we learned in the beginning of the slides. And so this is it's a very simple thing to do. I would just caution that if you have a lot of expenses, it would take a lot of time to do yourself, right? Versus if you were to use a software, if you have a lot of expenses, it's taking that data from QuickBooks for you, less chance of errors. It will automatically change or adjust on its own based on QuickBooks data. And so you do have to still go in and check every week just to make sure. And of course you want to check in and see, oh, so we're actually going to have more cash in hand at the end of the month than we thought. And oh, runway increased by a month. You still want to do your checks, but a software does a lot of this for you, right? Versus using the spreadsheet, you have to really be hands-on and type in all of these assumptions, which you probably will still go to QuickBooks and you'll probably still look at historical data and you'll use that to plug in these figures. It's just more steps and more work. Super doable, totally doable. It's just more doable if you have fewer transactions, fewer expenses, fewer incoming cash flows, because it's just a lot to handle on your own. But you can do it. And here's an example of one filled out. So I got June, July, August. Basically, just this might be what it looks like for you. You have sales, got some cash in, and then you see expenses. Yep, there's inventory, very end, you have a closing balance of 6,550. It's a very simple formula. It's really just cash on hand plus revenue minus expenses, end up with a closing balance. Again, very simple formula. It just becomes really complicated if you have a ton of expenses in just a larger business. Does that make sense for everyone, or are there any questions?
We have one question in the chat,
Okay,
and is, do these tools also help with income statements?
good question. Yes. So if you go back to, let me go back. Okay. So good question, actually. So if you actually look at Fathom, you will see that in the forecast section, which is what the screenshot is, there actually are sections that say profit and loss, balance sheet, drivers, and cash flow. What you will notice, so the profit and loss is another term for income statement. And so what you will notice, and this is what you want to see, is that if you were to look at your Fathom forecast and then went to QuickBooks and, for example, looked at October payroll expenses, salary and wages they have here, it should be the same number, because essentially this is a cash flow projection, but it's showing you in the format of an income statement or a profit and loss statement. So in a way, yes, it does help and kind of demonstrate an income statement, but I wouldn't use Fathom to screenshot an income statement and send it to your board. I would still definitely get that from QuickBooks, but you will notice the similarities because it is technically written in a way that is formatted like a profit and loss statement, and the figures should absolutely line up with the ones you see on QuickBooks. If they don't, then there's some kind of miscommunication between the softwares. Does that answer your question?
Yep, we're good.
Perfect. Great. No problem. Okay, so we did the spreadsheet. All right, so I guess we shall move on. All right, so winding down here, so cash flow management and projections, strategies for managing and improving your cash flow. So we talked about the cash flow projection as a whole, what it is, runway, burn rate, you can use Fathom, you can use a spreadsheet, talked about budgeting. What are some other strategies just in general to improve your cash flow? So that's what these bullet points are. So definitely, as I've been hammering in this whole time, weekly, if not daily check-ins on your software, your cash flow. So if that's your spreadsheet, if that's Fathom, if that's another tool, definitely want to keep an eye on it, because again, these are projections. They're not going to be 100% accurate because you are trying to predict the future. So you definitely want to check in if anything changes and just make sure you're on top of your cash flow. I would say as well, regular, at least monthly meetings with others at the company who are making purchasing decisions. So as I said, I lead a monthly special projects meeting. This is where everyone who makes purchasing decisions is present. And I get a really good understanding of the special projects, what we need to add, what we need to take away, has the budget increased? And you can also use these meetings to talk about budgets for other items, not just special projects. So does the lab budget need to be increased? And you know, did we increase salaries? Okay, do we make sure that we have the runway to increase the salaries right now? Like what do we have to do? Do we have to decrease the spending in another area? Are we doing self-care every month as a company? Because a lot of companies like to do that, right? They like to do some kind of self-care activity, or treat their employees. Are we going a little overboard? Are we spending a little crazy in that area? Should we reel it back in? How's our runway doing? How are our budgets doing? You really want to get on top of who is spending what. And yeah, you just want to make sure that you have a really good understanding of the cash flow as a whole. Also, if special projects need to be brought forward. So if there's I keep using equipment because that's what we use at Colorsmith, but if there's a piece of equipment that we were going to purchase in May because we're going to start the research in May, but, the partner that we're doing this research for has now asked us to begin the research in March, but we have to bring that special project up. So it's just really important to have these conversations. It just opens dialogue, it's communication to make sure that everyone's on the same page with the finances and you don't get blindsided. Assess payment plan options. So if you are in a situation where you are running out of cash flow, your runway, you have a couple months left, you have a financing round or, investor coming in soon, but, you have to get through these next few months, look into payment plan options. So with your accountants, for example, if you have accountants or lawyers, any of these suppliers that are sending you invoices, maybe on like a weekly or monthly basis, what have you, establish good relationship with them, of course, and assess the situation. Ask if there is a possibility where you can go on a payment plan. You have maybe a $4,000 invoice. Ask if you can pay $1,000 over the course of 4 months. Look into those options to to extend your runway as much as you can. Again, we're in a situation like this right now. We haven't had to change our payment plans yet, but we are coming down to the end of a runway. We're approaching a bridge round, so we're really having to keep a close eye on large invoices and determine if it's the best route to just pay it all now, or if we can negotiate another option. On the other hand, if you are going to go that route, or if you're not, just make sure you're looking at your invoices to make sure that you don't pay late, because a lot of invoices will say about net 30 at the bottom somewhere in small print, essentially saying if you don't pay this invoice in 30 days, we are going to charge you interest for every day that you're late. So keep an eye on those things as well, because that can creep in and that will just decrease your runway as well. So keep an eye on payment due dates. Look into non-repayable funding. We have a lot of great sources around, like IRAP, ACOA, CEI, and WillWorks. They help with co-op students. Really look into all the funding sources, and I believe that there is a session coming up on grants. So all of those funding sources, amazing to help you extend your runway, and just in general, just to make sure you have, cash on hand. Make sure that you're taking advantage of these different sources of funding, sometimes free money. Like I said, the non-repayable ones in particular, it's just free money to help you run your business. So look into those options. And then again, I mentioned SHRED, so scientific research and experimental development. So it is an incentive that encourages businesses to conduct research and development, and those businesses will receive a SHRED tax incentive. Companies can see up to $200,000-$300,000 in a return. So it's really, really great to look into if you are a company that is doing scientific research and development. Highly recommend you look into that, because again, it is another good way to just kind of get free money. And then you don't have to pay it back. It's a tax break, it's a tax return. So definitely look into that. You might be coming down at the end of your runway, but you know that in June you're getting your SHRED return for $200,000. And so, you don't have to worry so much about the runway. So it's really, really good to look into SHRED as well. And let's see, what else do we have? Send your invoices out immediately. If you're a revenue generating business, you want to send those invoices out immediately. Make sure you get your cash ASAP. Stick to your budgets if I haven't hammered that in enough yet. My favorite word, budget. To extend your runway, to, maintain your cash flow, just stick to your budgets. That's one of the easiest ways to do it. I know it's not always that simple. Unforeseen circumstances come up all the time, personal life, in the business, but try to stick to your budgets. I'm not sure if these are on the slides or not. Yes, they are. Okay, great. So consider contractors. This is another good one. If you need to hire help, but based on the experience needed or the expertise needed, you notice Maybe we don't need to hire a full-time employee at $80,000 for this. We can contract somebody out. Great way, great way to just managing and improving your cash flow, right? Is to just reassess, do I really need to hire a full-time employee for this, or can I contract them out? Maybe they'll do a couple hours for me every month. Things like that, very helpful. That could be HR, it could be some kind of business development, those kinds of things. So definitely look into contractors. Do an expense audit. So this goes hand in hand with budgeting, and it sounds scary, but it's not an audit from the CRA. It's essentially just going through your expenses. So might want to go on QuickBooks and look at your profit and loss statement, and just take a look at your expenses and sort out, can any of these expenses be removed? Are any of these unnecessary? I'll give you an example that's really, really small, but let's say you use Gmail for your company, and a couple months ago, 2 employees left. Are you still paying for their Gmail accounts? Again, very small example, very minimal funds, but it adds up. So are you still paying for the Gmail accounts when they left the company 6 months ago? Remove them. Decrease your monthly bill for Gmail, things like that. Go through, do an expense audit and see, why are we still paying for that? Or if you are doing, again, lab example, if you're just on autopilot and you order, 200 pipettes a month, do you really need them? Do an expense audit, see, okay, we have boxes and boxes of pipettes just piling up in the back office. We don't need to be buying these on a monthly basis. Just look into all of your expenses and really just figure out what is necessary and what is not. And this works in your personal life too. I'm not here to judge what anyone does, but for example, maybe you don't need your nails done every month. I don't know. You could look into those things too. Like, I could get away with every 2 months. I'm just throwing out examples, but do an expense audit. And then, of course, if I haven't hammered this one in enough yet, cash flow GICs and high savings accounts, it's free money. It is free money. So again, this ties in with having multiple bank accounts and only having your budgeted amount in your checking account to begin each month, and have the rest of your funds just earning free interest, free money in a cash flow GIC. It may not be a whole lot, but like I said, there's certain incentives with the bank. Sometimes they have promotions like, oh, earn 4.5%. And it's a pretty good chunk of change that you get to make for free. So look into that, keep that in mind. I will say anything that I've shared today, I keep saying things like put this amount in your checking account. You can do whatever you like with your personal life and with your company. When I say you need to put this amount here and this amount there, merely suggestions, and you, of course, have the authority to do whatever you feel is best. But these are just my tips and tricks and what I think helped me, what certainly helped Colorsmith, what helped turn their financial situation around. And I hope that you were able to get something out of these tips and tricks and learn a bit more about cash flow. That is just about it. So if you have any questions for me, I'm here to answer, or questions for Julia, she's here to answer. I'll also leave my email in the chat if you have questions that maybe you want to email me about. And that pretty much concludes the cash flow presentation. So thank you, everyone.
Thank you so much, Alexandra. We have a couple of questions in the chat. We have a specific one. I don't know if you can see them.
Yes, for Shred, you need a pre-approval letter saying your venture is Shred eligible. So for Shred, there is a pre-approval process that you can do with the CRA. It's not mandatory. You know what I'm going to do? I will get your email and send you more information about it, but essentially there is a pre-approval process that you can do with the CRA. If they clear you, what that means is that when you do your Shred return, you have a higher chance of there not being flagged and everything just goes through great and you get your return back quicker. I'm not 100% sure what, I think it's called a the name's escaping me, but it's something like it's a PCT, something of that nature. It's a pre-approval process with the CRA. Um, but if you have accountants or bookkeepers or someone like that at your company, you guys, we contract out accountants to do it. But there isn't really a pre-approval process. You just kind of go ahead and do the filing with your accountant. They'll definitely help you walk through because it is a big chunk of work, but it's a huge payoff. And your accountants will know, which part of your business is shreddable, it's called, which expenses you can actually write off. And they'll do like a whole big spreadsheet that will contain contractors and, for example, if like us, we're a research company, so about 5 or 6 of us are research scientists. The other half are not. So the research scientists, their salaries are shreddable. Mine isn't because I work on the finance side. And so you'll work with your accountants and have all of this mapped out in a big spreadsheet, and you'll fill out all this information, and they'll help you like, no, Alexandra's salary isn't shreddable, but they'll know. They'll know, based on your business and what you do, if you're even eligible. But I'm sure, I mean, if you're even asking about it sounds like you probably have a pretty good idea that your company could have some expenses that are shreddable. But I'll send you more information because the other thing is it's not super in my wheelhouse because I'm not on the science side, I'm on the finance side. So when it gets to all the science information has been added to our shred spreadsheet and all of that's been sorted, I go in and add financial data like salaries and things like that, and then communicate with our accountants when we receive the return. How much are you going to bill me to complete this for me, and that kind of thing. So the shred isn't super my expertise, but I do have, of course, um, colleagues that have more information. So I'll ask them for it, and I'll totally forward it all to you. I'm just going to copy your email right now. Did you guys start thinking for shred after you guys raised funding? So I believe shred was always kind of a part of the plan. So I joined the company 2.5 years ago, and I think they were doing shred before I joined. And we closed a seed round in May 2021. So it wasn't like I don't think it was an afterthought, if that's your question. It's always in tandem. So we're doing a raise because we need X amount of funds, but we're also going to do a shred return because why wouldn't we, right? We're eligible, if that makes any sense. Let's see, did that coffee?
Do we have any other questions? Just open it up. I have a question. So a lot of our organizations and a lot of the funders that we have here, we have a congratulations from Bernadette. The presentation was great. So we have a lot of funders that are in the process of growing. So do you have like a threshold when we have to really start put a lot of attention to the cash flow and the budget, like a threshold of like, okay, so if your expenses are moving beyond this level, here you really start putting much attention in your cash flow?
Yeah, good question. So, if you were in the millions, I would say you definitely need to take a really good look at your like just cash flow projections, budgeting, because I use the example of like basketball players, whether they were student athletes getting a scholarship or they're NBA players. When you have millions or a million at least in the bank, you think that nothing can stop you, and it's so far from the truth. And that's the time where you need to have a really good understanding of how much money you have, how much you need to budget, how much it costs to run the company per month, aka your burn rate. So I would say the more money you have, the more important it is to look into these softwares and things like that. If you have, let's say, $30,000, just like that example, I think it was less, but just like the example of the spreadsheet in the slides, you can probably do this yourself in a spreadsheet. But it's still just as important to keep an eye on it. I think that cash flow, no matter how much money you have in your bank account as a business owner, you need to be looking at cash flow from day one. And that's the most important thing that you need to do, because just like you can run out of millions out of nowhere, of course you're going to run out of 30,000 before you blink, right? You need to have a really good understanding of how much cash you have, how much you're burning, what your runway is, because as I was saying earlier, your company will just sort of cease to exist if you run out of cash, right? The number one thing to keep your business going is to have cash equivalents, right? So I would think it's always really important. But as far as if you want to use a software or a spreadsheet, the more money you have and the more expenses you have, I would definitely look into a software just to make sure that you know, it's more foolproof. It's not foolproof, but it's more foolproof than just kind of doing it all yourself in a spreadsheet. Does that answer your question, Julia?
Yeah, and it's really interesting because you could put this exercise even for your own like salary and things like that. Like a lot of the things that say, oh, save for 3 months or save for 4 months. That is like what you're doing is a burn rate kind of
Yeah,
thing for you, for your own personal finances, that you're saying, okay, here's the amount of money that I need to sustain my business, and when I'm going to be running out of money if I do it. And just translate that into your business is as important. So it is really good understanding this kind of terminology, especially when you're moving into funding rounds and you're trying to get
yes.
investors and things like that. Which brings me to our coming next workshop next week, that is investment and equity specifically. That's one of that one. And then we would have the grants where you can find some information about like the thread and information like that.
Yes, exactly. Perfect. Yeah, I'm really glad you guys are doing workshops on the grants and then also investments. That's great.
Yeah. Any other questions we have? Like it seems that we are no more questions. It
Um,
was so clear and it was so informative. Thank you so much,
okay, good.
Alexander.
Thank you all so much. I tend to go on tangents, so I apologize if it was a little confusing, but I appreciate everyone's feedback and thank you all for coming. I don't know if I'm pronouncing it properly. Lopsy, I will send you an email on Shred. But yes, you do a big portion of your business does have to be R&D. I will say Colorsmith, of course, is we're a complete research company, so that's why we are eligible for big returns. But I'll send you an email for sure. And yeah, thank you everyone. Really
Yeah.
appreciate it.
Thank you a lot. I put the feedback. I will send the slides and I will send the information as well through by email. But if you want you have any questions, you need some guidance, you can reach out and set some time to work with either Katerina or with myself. We are happy to just look at it and see if there is any help that we can help you with. As well. Thank you so much for joining us today. There is also the links to what the workshops are coming in those days, and I will be sending an email with the slides. And we have a new message. No, thank you, Alexandra. Again, it was great workshop. Thank you so much.
Thanks, Julia. Thank you for having me again. And thanks everyone for coming. Really appreciate it.
Have a good night.